Foreign direct investment, FDI, to Africa declined by 16% in 2020 to $40 billion because of the COVID-19 pandemic and the continued fallout, which has caused a persistent and multifaceted negative impact on cross-border investment globally and regionally. Now, this is according to data from the World Investment Report 2021, published by the United Nations Conference on Trade and Development in June of this year. Yet with this fall in FDI, over the past decade, Africa has attracted some meaningful investments due to its growing entrepreneurial drive, technology, financial services, agri-tech, and more, as some of these sectors are the recipients of FDI to the continent. And now FDI flows are expected to bottom out in 2021 and recover more lost ground with an increase of 10 to 15%. This would still leave FDI some 25% below 2019 levels and more than 40% below the recent peak of 2016. Today, we'll be analyzing Africa's top investment destinations. I'm Tolulop Adeleru Balogun from a rainy Lagos, Nigeria. Welcome. This is Business Edge. Joining me from Nairobi, Kenya, is Ken Gichinga. He's the chief economist, Mentoria Economics. Ken, welcome back to the show. Thank you so much for joining me.
Thanks for having me, Tolulop. It's a warm, sunny afternoon here in Nairobi.
A little bit jealous, I'm going to have to say, but we'll hold on. One side of the continent having one type of weather, another trying to make it out of the storms. So let's talk about some of the interesting storms that the continent has made it out of with some of the top economies. Now, the African Development Bank report that was recently released placed Kenya, Egypt, Nigeria, and South Africa, not in that order, accounting for more than 80% of investments into the continent. Does this come as any surprise to you?
Well, it's not a surprise because those four countries have been regional commercial hubs in their respective parts of the continent. Egypt in North Africa, Nigeria in West Africa. Obviously, South Africa has been very dominant, and Kenya here in East Africa. But that should not mean that there is not much activity. Actually, if you look at what's happening in Ghana, it's starting to contest what's happening in Nigeria. If you look at East Africa, we are seeing Rwanda, Kigali giving some competition to Nairobi. And up in North Africa, we are seeing Morocco also competing with Egypt. So these are regional commercial hubs, but it's not to say that there's nothing else happening in those areas.
And I think it's important to talk about this competition aspect. So the competition would mean that it might take some business and some money away from some of these other notable economies. But in the larger sense for the region then gains when more cities and countries are able to compete at such a level. What do you think about that competition and how it might actually help all of us to do better?
Well, absolutely. I think competition is healthy. There'll always be winners and losers. If you look at Ghana, for example, it's been able to attract the headquarters of Twitter, which was a big deal. If you look at Kigali, right now, one of the biggest competitors in Nairobi is what's happening with the smart villages in Kigali and Morocco too. So I think maybe South Africa is sort of a bit more shielded. It's extremely dominant down south. But I would not be surprised once other capitals in those parts start growing. But to your point, it's good for the continent that there are more points of innovation across the continent because that money inherently moves within the continent.
All right, so let's talk about the main people, Nigeria, Kenya, South Africa, as well as Egypt. What exactly makes these countries the dominant places to be? Why are they getting the majority of the investment portfolio that comes to the continent?
Well, there are a number of reasons. The report you talks about the presence of innovation hubs within those cities. There are about 650 innovation incubation hubs across the continent, and the vast majority is within those cities. So that really speaks to the startup environment, particularly things around fintech. But I think also cultural traits that are inherent. Nigerians historically are known to be extremely entrepreneurial, so as Kenyans. So I think there's also a bit of some cultural traits, but plus also that maybe that global exposure, where you have a number of people from those countries tend to be also travel a bit around the world and have that exposure to see the possibilities back home.
Mm. So the number has fluctuated because, of course, the pandemic took a big chunk of all of this, not just on the continent, but also internationally. But these are still economies that have had some economic issues, economic downturn. They've battled inflation, insecurity. They're still trying to work out policies and regulations in their in certain sectors of the economy, especially this fintech and this agri-tech sectors we like to talk about, even social unrest as well. In terms of this whole picture, how much effect have these issues had on the investment drives of these countries?
Well, I think they've had both positive and negative impacts. You know, when I hear about a cryptocurrency in Nigeria, I'm informed part of the reason it did so well was because, particularly with the strikes we saw last year and this year, the government was not able to contain cryptocurrency. So it becomes a very interesting way to be able to move money. So you have those social issues that come up. When you talk about Kenya with M-Pesa, for example, you know, we had that challenge before where moving money, you had a low and you had a very big unbanked population about a decade ago. So things like mobile money transfer came to fill that void where there was limited banking population. And that's why we saw mobile money transfer works extremely well in Kenya, but has not worked so well in South Africa. So definitely the socioeconomic conditions of the region definitely also dictate the type of innovations that come up.
So let's talk about this. You had mentioned earlier, of course, the report notes about 650 incubators happening across the continent. And these are the same countries that now account for a third of the incubators and accelerators on the continent. The report pointed out that the 4 countries that show the greatest investment in startups generally have higher FDI and are among the few countries able to assess the limited portfolio investment that is made in Africa. So what's the economic link? What's the business link between having higher startup investments or investment for startups and having a higher FDI?
Well, that report tries to make a strong argument of a strong correlation between the two and really makes the argument that when you have patient capital coming from other parts of the world into a country where there is a well-defined financial system, then there is a possibility of having enterprise. I think it's one of many reasons. I still believe there are fundamentally many other reasons. I think things such as ease of doing business is an important one. And there's also pretty much what we say entrepreneurial exposure legacies, where you have long-standing cultures of enterprise. That definitely is a big contributor. So I think they try to make a strong correlation between FDI, but there are many other countries that overtake Kenya in terms of FDI. If you look at Mozambique, if you look, I can name 3 countries that have more FDI than Kenya, but Kenya still tends to do much better in terms of entrepreneurship expectation. So I think it's a multifaceted issue that cannot only just be pinned down to one area.
Okay, so one of the facets many people talk about is population for some of these countries, and we'll get into that when we come back. We'll also look at, in terms of the concentration, are you seeing deliberate policies and actions on the part of these governments to make sure that the FDI continues to come in and it continues to come in heavy? But we'll pick up these points of the conversation after the break. You're watching Business Edge, and when we come back, Africa's top investment destinations, Egypt, Nigeria, South Africa, and Kenya. They top the list. How are they doing it, and what lessons can others learn from them? This is Business Edge. We'll be coming back after this break. And my guest in Nairobi, Kenya is still with me, Ken Gichinga, and we're talking about Africa's top investment destinations. Now, Ken, you had mentioned earlier about sort of enabling environments, making sure there are policies in place, and we've seen the innovation that has come. Oftentimes, if we use Nigeria as an example, in spite and despite of government actions and policies. Overall, how supportive do you think Africa has been of innovation and entrepreneurship over the past few years that makes some of the concentration of venture capital and equity that we're seeing now quite pronounced?
First of all, I think it's important we distinguish between the FDI coming into the continent with the diaspora remittances that are coming back into the continent. We need to ask, are these diaspora remittances being considered FDI or not? Because the reality is countries such as Egypt, Nigeria, South Africa, and Kenya, they have a huge diaspora in the US, in Europe. These are people who are sending back money to be able to invest in their home countries. And that money is also finding its way into business and into enterprise. And I think it speaks to the ability of a country to be able to have those global connections. I think it's extremely important. Countries where you find there is much less of that, maybe the population is much more internal and less well-traveled, maybe there isn't as much coming through. I think to your point in terms of what is African countries, what have they done? Well, I think it's different in each country. I think in Kenya, the education sector, with all its criticisms, has still produced a strong work ethic among Kenyans. So you find the strong work ethic really helps them, whether they are working in Kenya or abroad. And we find many countries where Kenyans have gone to, have made wealth, have been able to send that money back to Kenya and to be able to succeed. But I think more importantly is the idea that people in these countries believe they can be able to take risk, because the definition of an entrepreneur is somebody who is innovative and can take risk. That's sort of the Schumpeterian interpretation of entrepreneur. And there is that culture, and it's a culture that develops over time. And you find these countries also tend to have those cultural traits much more than their peers.
So what's the role of policy and regulation in all of this? Unfortunately, the Ease of Doing Business report has been discontinued, but it's been one report that many people look at the policy and regulation aspects as to how it affects businesses in these particular countries. And in terms of deliberate policies and actions in bringing in the FDI, how do we make that space more conducive? How do we make it more attractive than it is right now, when policy can change at the snap of a finger? It can change with administrations. It can change with a different person at the helm of the central bank. How do we get that right?
Policies indeed are a major part that have to be looked at. What you want is, for example, a low tax environment to be able to support enterprise. You also want a low interest rate environment where banks are not charging excessive or usurious interest rates. Keeping those interest rates low is also conducive. Then there's also the regulatory environment. You'll find in countries where to open a business such as a restaurant, you need to have almost 13 licenses, making it extremely difficult, and also creating avenue for corruption and rent seeking. So being able to simplify that, and that's one of the areas I think Kigali is doing very well, where in one day you can actually register an entire business. You have a one-stop shop where you can register a business and start producing. Then also you have what you'd call broader issues of educating people, really creating innovation hubs around the country and sort of profiling successful business people and helping them, creating these mentorship links where you have seasoned businessmen, the Dangotes of this world, being able to speak to a younger population on what they went through to be able to become successful.
So I want to take us back to the remittance aspect that you brought up, and of course how that might be or needs to be separated from the foreign direct investments. And as you said, it goes back into the economy in the form of businesses. But a lot of these businesses are informal businesses. Right now, Africa actually thrives. Of all the jobs, both rural and urban, there are more jobs in the informal sector for many of our economies than there are in the formal sectors. How do we sort of bridge that gap between the informal economies that we have operating and the foreign direct investments? Is there a way to bring FDIs into the informal sector, or it means that we need to formalize these sectors so that they can actually benefit from any investment coming from outside?
Well, I think that distinction between formal jobs versus informal jobs is becoming quite a gray area, particularly with the rise of the gig economy. If you think of an Uber driver, for example, here in Nairobi, one of the big challenges Uber drivers face is whether they should pay taxes. And sometimes when they go to downtown, they find these council officers who detain their cars, and they're not quite sure whether they should be paid taxes or whether it's the mother company that should be paying the taxes. So for them, it's a gig economy, and they should be able to just part with the commission. They should not part with anything else. So it becomes a very gray area. If you look at things like Airbnb, the same thing. Are you in the formal space or are you in the informal space? Who is paying the taxes? So I think the gig economy, and this is where a lot of young people across the African continent are finding themselves, tend to be in spaces where that are sort of partly formal, but also partly informal. And I think back to your point on policy, has to be able to formalize these things. If you go to the UK, for example, they made a ruling that Uber drivers is actually a formal job, and they need to be paid. They need to have annual leave. They need to have the benefits of a full-time job. But not every country has made that kind of conclusion.
All right, so let's get back to this population aspect, because I found this part of the report quite interesting. It said that other populous countries like Ethiopia, the Democratic Republic of Congo, and Tanzania have not attracted comparable levels of investment activity for startups, suggesting more is required than population levels. Likewise, island states with higher per capita incomes like Mauritius and Seychelles have not developed critical mass in innovative activities despite having higher levels of wealth and legal and institutional environments for businesses that are more typically higher rated than their peers across the continent. How would you explain this? So if we're looking at this FDI, it's obvious that we have some countries on the continent that have comparable population numbers, but it's not just about the population. We also have some countries that have higher wealth levels, but they're not seeing the necessary investments or the necessary innovative activities that might bring the investment. So why is there this sort of dichotomy happening across the continent in relation to this?
And that's a fantastic line of inquiry, Tolulop. I would say I think Ethiopia is a fantastic example. It's twice the size of Kenya in terms of population. It receives quite a bit of diaspora remittances. Let me not say FDI. It's a huge Ethiopian diaspora in the US, particularly around Washington, D.C. And they spend quite a lot of money back home. And if you travel to Addis, every 1 year, you find a different kind of city that's coming up. So is that entrepreneurial? Yes. But would you call that FDI? I would say that's more diaspora remittances driving it. And definitely, but you find Ethiopia has been a closed society for a long time.
Yes.
It's only now they're allowing mobile money, M-Pesa, to come in. So you find despite that, having that kind of FDI coming in on remittances, it's been closed enough where, for example, the banks are almost entirely owned by the government. Telcos are owned by the government. So it's only the last 1-2 years we are seeing the country opening up. So I think back to your idea of opening up, policies that open up the country, I think they're extremely important because you can receive a lot of money, but if it's a closed economy, you might not find that ability. But when you talk about Seychelles, I think that's also a fantastic example. That's what you call a small open economy. I think the challenge there is it's not highly diversified. So you find tourism is pretty much it. That's what drives the economy. And I think if you look at Nigeria, Egypt, South Africa, and Kenya, they're highly diversified economies. They don't just depend on one area like tourism or one natural resource like gold or aluminum, which is a challenge with most African countries where it's below the ground economy, where it's the minerals that drive. But what you want to have is an above the ground economy that speaks to human capital, speaks to innovation. And I think that's the challenges maybe Seychelles might be finding.
All right, so very quickly as we wrap up, let's look at the numbers, and I would like to see if you can give me some projections. So Egypt, Nigeria, and South Africa ranked as the top 3 countries on the continent in terms of attracting FDI over the past decade. They also dominate the African portfolio investment, as we said earlier. Egypt attracted FDI of about $56.2 billion between 2011 and 2020. Nigeria was second with $45.1 billion, and then South Africa with $41.3 billion in the same period. In terms of getting out of the post-pandemic economic situation we found ourselves, do you expect the numbers to reach 2016 peak numbers anytime soon? And what do you think the next decade will hold for FDI for these top three economies?
Well, much of that depends on what's happening in the global economy. Much of the money that you talk about coming to these four countries comes because of low interest rates in the West. So when you have low interest rates in the US, you find investors want to get better returns in these countries. But there is that indication that interest rates in America might start rising, and you might find sort of what you call that hot money starting to go back to the States. That said, the level of diaspora, for example, in those four countries continues to increase. And I think as long as that number is sufficiently big and sufficiently open to sending money back home and investing, I think that number should improve.
All right, Ken, thank you so much for joining us. Continue to enjoy your warm, sunny weather in Nairobi, Kenya, and I'll try to make my way through the rain here in Lagos. Do have a good one.
Take care.
All right, take care. So the numbers are there. The top four economies on the continent getting the investments: Egypt, South Africa, Kenya, and Nigeria. Countries with large economies, large youth populations, and also holding about a third of the incubator conversation fintech that's happening here on the continent. What does the future hold? We're not sure, but we hope it's positive returns for both the economies and their populations. You're watching Business Edge right here on News Central. NC4 to Watch is up next. And as we wrap things up, a few stories we're keeping our eyes on. We start in the southern part of the continent, where Eskom is back in the news yet again. Eskom has filed an urgent application against the National Energy Regulator of South Africa in the Gauteng High Court to prevent a situation where it is unable to generate any revenue from April 1st next year due to a decision made by the regulator. And that decision had 50% of its voting board members opposed. The deciding votes came from the acting chair, who tipped the scales towards the rejection of Eskom's latest tariff application. Zimbabweans are considering more renewable energy uptake in rural areas. Now, this is an opportunity to increase access to electricity in the country's rural areas. Currently, 83% of urban households have access to electricity versus 13% of rural households. Overall, more than 60% of the population still rely on solid biomass fuel for thermal needs and have no access to clean energy. About 20% of urban households use wood as the main cooking fuel because of the unreliability of electricity supply and financial constraints. Third on the list stays in the general area. Now, Tanzania's flag carrier Air Tanzania is set to receive 5 more aircraft after the government made a down payment of $258.7 million for the purchase, expected to be delivered by the end of 2023. The planes will raise the airline's current fleet to 16. In addition to 2 new Airbus A220-300s received earlier this month, the airline's fleet comprises of 2 Boeing 787-8 Dreamliners, 2 other Airbus A220-300s, and 5 Bombardier Q400-8-400s. And finally, Kenya's weekly Mombasa tea auction had 8.7 million kilograms of tea offered for sale. The amount on offer increased from 8.3 million kilograms during the previous sale, but decreased from 9 million kilograms for the same period last year. Of all the tea offered for sale, 7.7 million kilograms was sold. The tea auction recorded an increase in prices, with the kilogram selling at an average price of $2.29. And that's it. It's a wrap on Business Edge. Thank you so much for joining us and kickstarting your financial week with us. Don't forget, the rest of this week, 11 a.m. West African time, we'll have the biggest business, economic, and financial stories from here on the continent. Because at News Central, we put Africa first. I'm Tolulop Adeleru Balogun. See you soon.